Hey guys, welcome to another Damilola Forex Academy teaching. In today's teaching, I'm going to be showing you all the effectiveness of a trend line trading strategy that I've studied over 7 years of trading the Forex market. This trend line trading strategy is very profitable and can give you the highest risk to reward ratio that you've ever seen or you've ever traded in Forex. Okay, so I want you to sit back, grab a pen, grab a book, and take note of the strategy and apply this strategy and make massive profits from the understanding and mastery of this very simple trend line trading strategy. So let's go, guys. We are going to graciously start by talking about what trend lines are. It's important to note that trend lines are diagonal support and resistance tools. Okay, let's go ahead and write that out. Trend lines are diagonal support and resistance tools. Okay, and it's also important to note that trend lines are used to checkmate the strength of a trend. Let's also write that out. Trend lines are used to checkmate the strength of a trend. That is, if a trend is strong, a trend should keep obeying a trend line. Okay, while if a trend is weak, we are going to see a violation of the trend line. Okay, so it's quite straightforward. Like I said, trend line trading is one of the most simple and profitable trading strategies that you all can learn, practice, and become crazily profitable. You can make a crazy number of pips by just knowing the system. Okay, at the end of the day, coming into trading it's not about how complicated the system is, but it's just about how profitable the system is. That is the most significant at the end of the day. Okay, so we said trend lines are diagonal support and resistance tools. Okay, they are horizontal support and resistance tools, but trend lines is the diagonal one, while what trend lines are used to checkmate the strength of a trend. That is what, if a trend is weak, price will keep obeying a trend, while if a trend is weak, price will violate a trend, while if a trend is strong, price would keep obeying a trend. Okay, so a trend line is very, very significant, and it's one of our top tool in price action trading that we use in making what massive profits in the market. Okay, so we are going to go next to talking about what trend lines. You know, what are the types of these trend lines? Let's write that out. That's what the types of trend lines. It's important to note that we have two types of trend lines. That is, we have the ascending trend line and we have the descending trend line. Let's also write that out, that we have the ascending trend line and we also have the descending trend line. It's important to note that ascending trend lines are used to draw bullish trends, or in another word, we can say ascending trend. Okay, for example, this is an ascending trend line right here. Let's go on to a plain chart. This is an ascending trend line right here. Okay, because it is used to draw what an ascending trend. Remember that what, for a trend can only be ascending or descending. At maximum, a trend can also range. Okay, but a ranging trend means that what, means that market is trading, you know, just within a box, and this means that what, there is no trade entry, you know, for this particular market condition, but there's profits made in trending markets. Okay, profits are made in trending markets, so that's why what, we have either what, the ascending or the descending trend. Okay, that's where we make money, either price is making ascending or descending trend. Okay, so like we said, this is an ascending trend line. Okay, and an ascending trend line is used to draw what, a bullish trend. Okay, we can clearly see that this is a bullish trend because we can see prices on clear bullish structures of higher highs and higher lows. Okay, while what, a descending trend line on the other hand is used to draw bearish trend. Okay, or we can also say a descending trend. If price keeps respecting a trend line like this, okay, it will mean that what? It will mean that price is bearish, and this is a clear example of a descending trend line. Okay, so this is a clear example of a descending trend line. Okay, so a descending trend line is used to what? Checkmate the strength of a bearish trend. If price keeps obeying the descending trend line, it would mean that the descending trend line is strong. While if prices violates a descending trend line, it would mean that the descending trend line is weak. Okay, so let's go ahead and show ourselves, the ascending trend line, the descending trend line, and just do a quick example of when prices obey this trend line and when prices violate this trend line. Okay, so we are going to start from the ascending trend line. Let's write that out. The ascending trend line. We'll start from this. Okay, so in this case, this is the first example here where we can see prices keep obeying a trend line. Okay, so this is a perfect example of prices keep obeying a trend line. This would mean that what? That the trend is strong. Okay, now this is another example of the same bullish trend line, but in this case, we can see prices make the clear bullish movements on it, but here we can see a break of the trend line right here. This indicates what? Trend weakness. It can also indicate end of a trend. Okay, because like we said, if a trend is strong, price would keep obeying the trend line. Okay, but because of there's been a break in the trend line, it indicates what? That the particular structure or the particular trend is weak, and that could also indicate a potential end in that particular trend. Okay, so this is very important when it comes to ascending trend line. You can use it to validate if a trend is strong and to validate weakness in a trend. Okay, on the other hand, also the descending trend line can also be used in the same way, can also be used in the exact same way. Okay, in this case, let's start with the first example of prices respecting the trend line. Okay, then now let's take it to the other example of prices disrespecting the trend line. Okay, in this case, price by respecting the trend line, but there is now a weakness in the trend, and that caused what? The trend violation right here. In this case, we'll say trend is weak, and that's why there's a break of the trend line. While in this case, we'll say what? That the trend is strong. That's why prices keeps obeying the trend line. Okay, so this is very important to understand that a trend line can be used to know if a trend is strong or if a trend is weak. So trend line is a very, very important tool that we use in making crazy profits in price action trading. Okay, so the next thing I'm going to be talking about is how to draw a trend line. Okay, so let's go ahead and write that out. How to draw a trend line properly. Okay, how to properly draw a trend line. Okay, it's important to note that in drawing a trend line, there are two phases of drawing a trend line. Okay, that is, the first phase is what we call the establishment phase. Okay, then the next phase is what we call the confirmation phase. Okay, so these are the two phases of drawing a trend line. Okay, so let's go ahead and draw out a trend line. Okay, so this is a trend line. Okay, so what is the establishment phase? It's important to note that in drawing a trend line, in this case, we'll start from the ascending trend line. We must have what? Two troughs. Okay, these two troughs are what we call what? The establishment phase. Okay, that is, we don't pick trades using what? Using the first two troughs. The first two troughs only establishes a trend for us. Okay, so, and it's also important that what, in drawing a trend line, it must touch. We must have, the first and second touch, they must touch the trend line. Okay, so it's important that we make sure that what, that these two troughs touch the trend line. Okay, while the third touch in this case is this third touch right here, known as the confirmation phase. So the confirmation phase could be the third touch, fourth touch, fifth touch, it doesn't really matter. Okay, so far it starts from the third touch. Okay, so this is known as the confirmation phase. Okay, so in this case, what are we confirming? When prices touches this trend line, there are two things that prices can do. One, if the trend is strong, what is prices going to do? Price is going to take back off. Okay, this indicates what? Strength in the trend. While if the trend is weak, what is prices going to do? Price is going to break the trend. Okay, so in the confirmation phase is just that phase where we'll confirm our entry. Okay, where we'll confirm what to do with prices. Okay, if prices respect the trend, it would mean that the trend is still very active, and this provides buy opportunity. While if prices violate the trend, in this case, it provides what? Sell opportunity. Okay, so but it's the confirmation phase, like I said, can also be the fourth, fifth, and sixth touch. So far it starts from the third, price can still go up, still be strong, still come here, still be strong, go up, then eventually break it. Okay, so that's why it's important that what, that we understand that what the confirmation phases is from the third touch, to fourth, fifth touch. Okay, like we can see at this level here, prices respected the trend line, could give a buy opportunity, respected the trend line, could give a buy opportunity, and at this point here, we can see prices violate the trend line. In this case, could give what? A sell opportunity. Okay, so that is it when it comes to the ascending trend line. Okay, and like I said, it's important that what, the first two establishment phases must be signified. Prices must touch a trend line twice to establish a trend. Then the third, fourth, fifth, sixth touch can be what? Can either be prices, confirming that the trend is strong, or confirming weakness in the trend. Okay, so the next one we're going to be drawing out is what? Is the bearish trend. Okay, that is the bearish trend. Now, what is this bearish trend, or we'll say descending trend? How do we draw a descending trend line properly? Okay, so first of all, just like we did on the ascending trend line, it's important that for a descending trend line, we have what? Two peaks. Okay, this is the first peak, then what? Then this is the second peak. Okay, so the first and second peak confirms what we call the establishment phase, just like we mentioned, establishment. Okay, so the first two peaks confirms the establishment phase, while what? The next peak, okay, it could be the third, fourth, fifth, or sixth peak. The next peaks from the third confirms what we know as the confirmation phase. Confirmation phase. Okay, so in the confirmation phase, it could be prices respecting the trend line or violating the trend line. Okay, so in this case, we can see that at this point, prices what? Respected the trend line right here, and this could have provided a sell opportunity, while in this case, let's say what? Prices violated the trend line right here, which in this case would now provide what? A buy opportunity. Okay, so this is how to draw a trend line properly. There must be two peaks. In this case of a descending trend line, there must be two peaks. That's what establishes the trend. Then the third peak and the fourth peak are what? Are confirmation for either what? Prices indicating a strength in that trend, or either prices indicating weakness in that trend. Okay, so the next thing I'm going to be talking about is how to trade trend lines with chart structure. Okay, so let's go ahead and write that out. How to trade trend lines with chart structure. Okay, so on this next chapter, I'm going to be talking about how to trade trend lines with chart structure how to trade trend lines with Fibonacci, with support and resistance. Okay, so I'm going to be talking about how to trade trend lines with a combination of all of these tools. Okay, all of these tools, could help to give, a more accurate bias or a more accurate use of trend lines. Okay, trend lines can also be used on its own, and this strategy I'm going to teach you today is going to be specifically with using trend line on its own for high probability trade. However, you can also collaborate the use of trend lines with chart structure, with Fibonacci, and with support and resistance. And I'm going to explain every single thing in detail, of how we use it for high probability trades. Okay, so when we're talking about trading trend lines with chart structure, it's important to note that when it comes to chart structures, however, we have two types of chart structures. Okay, I've done an extensive videos on chart structure, and you can check that in my channel, but I'm going to briefly talk about this here. Okay, so when we talk about chart structures, it's important to note that we have two types of chart structure. One, we have the bullish chart structure, and secondly, we have the bearish chart structure. It's important to note that a bullish chart structure is a combination, okay, or a coordination of prices making higher highs and higher lows. That is, okay, this is a clear example of a bullish chart structure. For example, this is an higher low right here because it's higher than the previous low, which is also an higher low because it is higher than this low right here. Okay, this is an high, while this is an higher high because it's higher than the previous high, and this is also an higher high because it's higher than the previous high. Okay, so this is a bullish chart structure. Okay, how about the bearish chart structure? Let's go ahead and talk about that. A bearish chart structure is this. This is a clear example of a bearish chart structure. Okay, this is a lower high because it is lower than the previous high. This is also a lower high because it's lower than the previous high. While this is a lower low right here because it's lower than the previous low, which is also a lower low because it's lower than the previous low. Okay, so this is very important to note that prices can either make bullish chart structures or make bearish chart structures. Okay, however, how can we use chart structures in coordination with trend line? In chart structure, there's something I will call a break of structure. Okay, how does a break of structure occur? This occurs when, for example, a bullish chart structure is violated and prices begin to make a bearish chart structure, or if a bearish chart structure is violated and prices begin to make a bullish chart structure. Okay, in this case, we'll start from the example of a bullish chart structure. Okay, so this is a bullish chart structure, right? On clear coordinations of higher highs and higher lows. Now, instead of prices continuing to make the higher low and take off, what did prices do? In this case, prices broke the last higher low. Okay, this is what we call a break of structure. Okay, so now, when does a break of structure happen? A break of structure happens when in this case there's been weakness in the bullish structure. Okay, and how are we able to collaborate the trend lines with chart structure? Okay, we can bring out our trend line tool from the low right here, low. We can see the first two touches and we can see the establishment touch, right? These first two touches, like we know, are the establishment, while the third touch, like we know, is the confirmation. Okay, so we can see that in this case the third touch respected, but the fourth touch right here broke the trend line. Okay, so we can see that the fourth touch broke the trend line. So this could indicate a very beautiful sell, because there is weakness in the trend. Okay, that means that the bullish trend is probably ending and price is going down. So this indicates a weakness in the trend. Now, in collaborating trend line with chart structures, first of all, we've seen a break of a trend line. Okay, second of all, what now reiterates our entry and gives us extra confirmation in our already open position at the break of trend line is prices breaking structure. That is the higher low, this level that we identified right here. Okay, let's take that back. This level that we identified right here, you can see this low right here, okay, is the last higher low, okay, and we can see that prices broke the last higher low right here by making this close below the last higher low. Prices broke it. So in our already open position, this one, the break of structure now give us that extra confirmation that okay, we already saw a break of the trend line, which indicates weakness in the trend. Secondly, we now saw what? A break of structure. Now this gives us a very strong bias and a very strong opinion in our bearish bias. Now we know that what we can sell and take profit at significant levels, which I'm going to be talking about. Okay, so this is how to collaborate towards a trend line with chart structure. Okay, first of all, when you see a break of the trend line, that opens a sell. So what now gives you an extra confirmation is when you now see what? A break of structure. When you now see a break of structure, it now shows that it gives you that extra confidence that, you know, just like, you know, an extra confirmation that, okay, apart from seeing a break of trend line, what has happened? There's been a break of structure also. The last higher low has been broken. Price has now created a lower low, confirming our initial bias of what? Of a break of structure. And in this case, you know, you can ride prices, like I said, and take profit at significant levels, which I'm going to be talking about. Okay, so now this is it for the bearish, for the break of the bullish trend line. However, how about the break of a bearish trend line in collaboration with structures? Okay, we can see prices make this push exhaustion, push exhaustion, push, and what? And a break of structure. This is where the break of structure happened. That is what? A lower high was broken. Instead of prices respecting and, you know, keep creating, you know, the lower high and, you know, continue, what did prices do? Prices what? Broke the last lower high. This has shown us that what? That the bears are done. However, what is the first indication? Okay, because before prices broke structure, there was a trend, okay, and the trend was what? Was a bearish trend, okay. So what is the first indication that lets us know that a trend is done? The first indication is the trend line. We can see the first two touches, which are what? The establishment phase. This is what? The confirmation phase, and this is also another confirmation phase. Okay, so we can see that this touch right here, establishment, second touch where prices touch the peak, establishment, third touch, confirmation, prices respected the trend line. That means that what? The trend is still very strong. While the fourth touch right here, okay, the fourth touch right here, what did prices do? Prices broke above the trend line, indicating what? Bearish weakness. Okay, so this is how trend line can be used. Okay, so first of all, the trend line has shown us that, you know, the trend is done. We've seen weakness in the trend line. Then another thing that now confirms, gives us that double confirmation that, oh, you know, you can keep riding to a significant, you know, take profit level, is what? Is when the structure is now broken. The last lower high, which is right here, you can see the last lower high right here is broken, and price has now created an higher high. Okay, so first of all, the first indication that what? That tells us about a weakness in a trend is the trend line, just like as we've seen, a break of a trend line. First indication. The second indication is what? Chart structure in this case now. So trend line in collaboration with chart structure will give you high probability trades, you know, and you can ride prices. Okay, it just gives you that double confirmation that, oh, now there's been a break of structure. What are you going to do? You know, keep riding prices and take profit at significant level. Okay, so that is using trend lines in collaboration with chart structure. Okay, so the next one I'm going to be talking about is using trend lines in collaboration with Fibonacci. How to trade trend lines with Fibonacci. How to trade trend lines with Fibonacci. Okay, it's important to note that in trading trend lines with the Fibonacci, you have to know how to use a Fibonacci. You need to understand what a Fibonacci is. Okay, so now it's important to note that a Fibonacci is a tool that allows us to know where prices might be ending. Okay, Fibonacci can be a retracement tool, and it can also be an extension tool. Okay, let's briefly write that out. That Fibonacci is a tool that allows us to know where a trend, okay, where a trend might be ending. Okay, so this trend could be a retracement. That's why we have the Fibonacci retracement levels, and this trend could also be an extension. That's why we have what? The Fibonacci extension levels. Okay, so now what does this mean? This means that what? This means that we can use the Fibonacci with trend line for entry and for take profit. Okay, so let's write that out, that Fibonacci can be used in collaboration with trend lines for both entry and exit. Okay, so we are going to start by explaining, let's start from the latter. Let's start from how Fibonacci is used as an exit tool. Okay, so let's, open up a clean page. Fibonacci used for exit. Fibonacci used for exit. Okay, so it's important to note that when you are trading, trend lines, one of the big question is where to exit prices. If you're in a trade entry opportunity, where are you going to exit prices? Okay, it's important to note that, let's just draw a trend out. Let's draw a trend out like this. And we saw a break of trend line. Let's say prices kept respecting. Okay, let's draw this properly so we don't, confuse ourselves. Let's say prices keeps respecting a trend line and eventually breaks the trend line. Okay, so now this provides us what? With a trade entry opportunity. Okay, because a break of trend line has indicated weakness in the bearish trend in this case. So now the big question is, where can you exit prices? Okay, so now you can exit using what? The Fibonacci. That is, you can bring your Fibonacci tool out and what? And there's a level in the Fibonacci tool that is called the golden zone, which is the 61.8. Okay, and you can pick your entry and exit at the 61.8. Okay, that is what, how you use your Fibonacci in this case. You drag your Fibonacci from the high and drag it to the lowest point of, of the trend, and you can decide to exit at 61.8, which is just above the 50.0 of the movement. So the 61.8 is going to be somewhere around here. We are going to go into the real life chart eventually to show you, a real life example of using Fibonacci for take profit. Okay, so in this case, when you enter at the break of the trend line right here, you can ride the trade to 61.8. Okay, and soak in so much pips to 61.8. So that is very important in using Fibonacci for an exit. Okay, always remember the golden zone. Okay, the golden zone is the 61.8, and you can decide to take profit at the 61.8. Okay, another important level that that the Fibonacci gives us that you can take profit is the Fibonacci 100.0. Okay, so the Fibonacci 100.0 is the level where it's at the beginning. In this case, we've seen a break of trend line. It's at the beginning of the trend line, okay, or beginning of the structure. Okay, that is the 100.0 level identified in the Fibonacci. So this is 100.0 level. So we can write it here as what? 100.0 level. So it's also important to note that what, when you are trading, there are also probabilities that what, that prices can get to the highest points where the trend line broke, or where the structure broke. In this case, price can get to the 100.0. Okay, so now in this case, how are you going to know? Okay, if you're using trend line, what you will do is what, at 61.8, okay, which 61.8, on the journey, like I said, 61.8 is just above the 50.0. At 61.8, you can decide to take out profit. This is always very important. Don't just hold prices assuming that prices will get to the 100.0. No, instead at 61.8 you can take out profit, then ride the remaining move to 100.0. And if prices does not get to 100.0, then that is okay. Price will come back and hit your your trade out, but you've already closed in maximum profit at 61.8. However, you can decide to also, for most opportunities, just take profit at 61.8. Okay, when trading trend line, it's important to note that it's about taking profits. Okay, it's not just about riding every single move, but it's about taking profits. Okay, and then using Fibonacci, 61.8, also called the golden zone, is your safest exit. Okay. However, there are also moments whereby you can decide to, okay, at 61.8, take half profits, break even the opportunity, take half profits, and just ride to 100.0. So if price eventually comes back and hits your break even, that will be fine. First of all, price hits your break even, but you've closed half profit already. Imagine, at 61.8, you're already making $10,000. Then what do? You close $5,000, then you break even. And maybe you are riding prices to 100.0, which would have given you another $10,000. Okay, if price does not get to 100.0, that is okay. If it comes back and hits your break even, which you should have broken even, when price gets to 61.8, then that is fine. Price will hit your break even. You've closed $5,000, while what price hits your break even, that is closed in $0. That means you have $5,000 already in the bag. What do? You go on to the next trade entry opportunity. Okay, so it's important to note that Fibonacci is a very, very important tool in regarding what our exits. So the next one we're going to be talking about is Fibonacci used for entry. Fibonacci used for entry, of course, in collaboration with the trend line. Okay, it's important to note that, just like we said, a Fibonacci allows you to know where a trend might be ending, while what a trend line shows you that a trend is ended, because what a trend line indicates what weakness in that particular trend or strength in that particular trend. Okay, so this means that what if prices is trading, for example, if prices is trading and prices get to a significant level, probably this significant level, just like we said, is the golden zone, 61.8. Okay, probably this significant level is the 61.8 level, which is the golden zone. Okay, there is a high probability that prices may not be able to go beyond that level. Okay, because price has gotten to the golden zone and price may not be able to go beyond that level, and this prepares us for our entry. That is what is now going to be next. Now we'll now bring out our trend line. Okay, we'll now bring out our trend line and wait for prices to reject the golden zone of 61.8 and come and break the trend line. Okay, so when price breaks the trend line, this now provides us with a buy opportunity. Okay, so we can see that what trend line use Fibonacci used for entries are what, oh, price is rejecting from a 61.8. Okay, that is a golden zone. That is what price may not be able to break. Then what prices now, after rejecting the 61.8, now came back and broke the trend line. This indicates that the buy in this case is set, and you can be able to buy, and take profit at significant levels. Okay, so that is very important. It's also the same thing applied in, a bearish or a bullish trend. If prices gets to a particular level, like the 61.8 level, sometimes it could also be the 100.0 level that prices gets to, and price may not be able to break beyond. But like I said, apart from the 61.8, another very significant level is the 100.0 level. It's a very important level to take note of. Okay, so when price gets to the 61.8 level, price may not be able to break beyond. And what will prices do? This could now be an indication that could send prices to break the trend line. When price now breaks the trend line, it provides us a sell trade entry opportunity, and we can sell to significant levels or take profit. Okay, so the Fibonacci is very important when it comes to the use of the Fibonacci for entry or for exit. Okay, so the next thing I'm going to be talking about is using trend lines in collaboration with significant support and resistance levels. Okay, so we can also use trend line in collaboration with significant support and resistance levels for what? For take profit and also for entry. Okay, so it's important to note that trend lines can be used for take profit and entry, and double entry confirmation with support and resistance. Okay, so I'm going to talk about this briefly. Okay, so for example, we see prices make, clear bearish movements like this. Okay, and we now bring our trend line out. Okay, and we now see a break of the trend line right here. We see a break of the trend line. This is a first indication of what? Of bullish presence. That is what the bears are done and the bullish and the bulls are in. This could provide us what? With our entry opportunity. Now, this level right here is also a resistance level. Okay, this is also a resistance level. So in using it for entry, if prices breaks a resistance level, okay, this could also indicate that what? It could also indicate that it could validate the new trend. Okay, first of all, we saw what? A break of the trend line. Second of all, we saw prices break a resistance level. Okay, if the bearish movement was strong, that would mean that price would not be able to break a resistance level. But for price to break a resistance level, that also indicates that what? It doubles the validation of the break of trend line. Oh, we've seen a break of trend line. In this case now, we've seen a break of resistance, which sometimes would also collaborate as a break of structure. Okay, but if sometimes it will not collaborate as a break of structure, but either way, we saw what? A break of resistance and what? And a break of trend line. This now doubles our validation, and we know that, oh, we've seen a break of resistance. You can buy and take profit at significant levels. Okay, so that is the same thing also when it comes to the supports. Okay, for example, we see prices make all of these levels right here, and what? And we bring out our trend line, touch one, touch two. Let's make the third touch properly, touch three right here, and prices makes this move. Okay, so when prices makes this move, if prices breaks a trend line, first indication of a sell, okay, because this has shown us that, okay, there's bullish weakness, then we can now be able to double up on our validation after prices breaks a support level. You can see the support level here. After prices breaks the support level, it now doubles up on our confirmation, because what? If prices does not want to continue, or if it was, like the break of trend line was not very strong, what would happen? This support, prices might catch this support and go back. But for that double confirmation, and that's something to validate our initial entry. If price breaks the support level, you know that, oh, price has broken support. Keep riding. It's just like a double validation, a double confirmation. Keep riding to take profits at significant levels. Okay, so that is very, very important. Okay, while for take profit, how is it used to take profit? Okay, so let's draw it out again. Okay, in this case, we saw what? A break of a trend line also. Okay, let's say the break of the trend line happened right here. Okay, we can use what? We can use the resistance level in this case for take profit. That is what? Okay, we have been able to put in our entry. Where is going to be, levels that we are going to be watching for take profit. We are going to be watching, of course, our take profit is not going to be this close, especially when prices has already broken this resistance. So our take profit level in using resistance for a take profit can be this level as TP1. Okay, can be this level as TP1. When price gets to this level, this could be TP1. And if prices breaks this resistance, you can keep riding, to this other level as TP2. This is in using what? In using the resistance as what? As take profit. This could be your TP1 level, and this could be your TP2 level. Okay, so it's important that when trading trend line, you can be able to apply what? Significant resistance levels as take profit. When I say significant resistance level, that means that what? At least there should be, more than one reaction, to make it a significant support or resistance level. That is, prices should have reacted at that level more than once. Probably price has made, a support and a resistance at that level, or double resistance at that level, or double support at that level. That makes it what? A strong level that you can decide to take profit, or you can decide to, take half profit at that level and see price will break and coast to the other level. It's also the same also when it comes to the bullish structure too for take profit. Okay, if we see prices make this move like this, okay, and prices breaks the trend line, okay, this provides what? A sell trade entry opportunity. Then we can decide to take profit here as TP1 at the support level, okay, or take half profit and see if price will, post to the lowest point of the trend line or the lowest point of the structure. Okay, we can decide to make the lowest point of the structure our TP2. Okay, while this point here, we can decide to make it what? TP1. However, when prices get to TP1, you can decide to take half profit. In some days, you can decide to take full profit at TP1, and the mindset of a trader is you cannot ride all the moves in the market. Okay, so sometimes when prices get to TP1, you are like, okay, prices might eventually get to TP2, but this TP1, I'm already making $3,000. Let me just take my money. Because, like I said, with trendline trading, it's all about taking your money. That is what it is about. It's not just about wanting to ride every single move. It's about taking your money. Okay, a lot of traders see so much profits, but because of greed, okay, because of not wanting to take profits, they will allow so much profits to come back into stop loss or into break even. But for us, it's all about what? Okay, understanding trend line in collaboration with Fibonacci as a take profit, horizontal support or resistance as a take profit, and collaborating all of this for take profits for us. And that's why whenever we're in a trade, we always take profits. We always take profits. So if our prices moves in our direction, we always take profits. Okay, so this is it in using trend line in collaboration with support and resistance. We also talked about it in using it with chart structure and in using it with Fibonacci. Okay, so now I'm going to be taking our trendline trading strategy in full. Of course, every single thing I've done is explaining trendline trading strategy, but I'm going to just go over it and reiterate it, especially in regards to how we take profits, how we take our entries. Like I said, it's something I've already taught, but let's just put everything, let's compound everything together into a very brief teaching. Okay, so let's write it and let's name it the trendline trading strategy. Okay, so now in the trendline trading strategy, just like we said, the first thing you have to do is identify a trend. There are three ways a trend can move. One, it can move bullish. Two, it can move bearish. In fact, the third one is not even called a trend, because that is a ranging market, and there's no money to be made in a ranging market. So we either have a bullish trend or a bearish trend, also known as the ascending or the descending trend. Okay, so the first thing is to identify a trend. Okay, go onto your charts, probably the 1 hour time frame, the 30 minutes time frame, 15 minutes time frame, whatever. Identify a trend. Okay, then once you identify the trend, what is the next thing you do? Like I said, identify a trend. Let's take this. Then the next thing you do is in this case, okay, for us, how we make profits is that we look for a trend line breakout. You can also make profits when prices, respect a trend line. That is 100% okay. But for us, we make our most profits. And in fact, we decided to concentrate on that, on making profits on trend line breakouts. Okay, because we realize that when trend line breaks out, that is price was on a bullish structure before. Right now, there's been a break of a trend. It has signified weakness in that trend and ride prices to significant levels. Okay, like I said, what are the significant levels? Significant levels are previous area of support or resistance that are significant, something like in this case support levels. Another level that is important is the Fibonacci. How will you get the Fibonacci? Bring the Fibonacci, drag it from the low point right here, drag it to the high point, and you can take profit at the golden zone, which is the 61.8 that we talked about. Or at 61.8, you can decide to only break even prices and ride prices down to the 100.0 level. 100.0 level is the lowest level that prices get to. Okay, that is the lowest level of the trend line. Sometimes prices get to those levels. Okay, so it's important that at 61.8 you can take half profit, then ride the remaining to 100.0. Okay, so that is a way to take profits. Okay, another way to take profit that we talked about, okay, is support level. In this case, support level TP1. This can be TP1, another support level again. This can be TP2. Okay, so this is very important. So like I said, our trend line trading strategy, you must see a break of structure. And secondly, you must see you must see a break of structure. Then secondly, you can hide your stop loss just above the trend line. In this case, hide your stop loss just significant pips above the trend line. Then ride, to probably a strong support or resistance level, or ride to the Fibonacci 61.8. or the Fibonacci 100.0. Most days for my take profit, I use the Fibonacci. Okay, for most days, I just write, and use the Fibonacci, identify my take profit at 61.8, or identify my take profit at 100.0. Okay, so for most days, that is what I do. Enter a trade at the break of trend line, hide my stop loss, significantly just above the trend line in this case, and ride to 61.8 for most days. And some days I break even at 61.8 and ride to 100.0. Okay, so this is the trend line trading strategy, in full. You understand? Like we said, whenever you enter a trade, what doubles our confirmation? Break of structure doubles confirmation, or a break of support doubles confirmation, all of these things, help. Or maybe prices is rejecting, from a 61.8 Fibonacci level. That is also important. So maybe price is reject from 61.8 Fibonacci level. That also doubles your confirmation that, oh, price is rejecting at the golden zone. That's why price eventually came and broke the trend line, and it's giving you the opportunity. Okay, so this is it when it comes to a break of the trend line, in this case an ascending trend line. And now we are now going to do an example of the same thing happening in a descending trend line. Okay, so let's go over that happening in a descending trend line. So like I said, first of all, the first thing you have to do is what? Is identify a trend. Okay, as soon as you identify a trend, the next thing is what? Read the trend. Okay, we can see the trend. We can see that what? We can see that these two are the confirmation phase, like we know. Then, we can see if price keeps confirming it, then we are going to wait. But eventually, when prices breaks the trend line, that provides us with a buy entry opportunity. In this case, it provides us with a buy entry opportunity where we can hide our stop loss at the low right here, just below the trend line. We can hide our stop loss and ride prices, okay? Ride prices significantly to what? To 61.8 at minimum, or sometimes even to 100.0, like I said. Or you can decide to, ride prices and exit at a sensitive what? Resistance level. You can take this as TP1, okay? Exit at a sensitive resistance level. Or you can decide to just bring out your Fibonacci. In this case, you drag your Fibonacci from the high to the low and exit at what? Exit at the Fibonacci 61.8. Or you can decide to just hold prices, to 100.0. It depends on, that whatever concept, that price is currently on. Okay, so this is the trend line trading strategy as a whole, and we are going to go over to the real life charts to show you clear examples of how you can be able to apply this trend line trading strategy for high probability, real time, just the real time, real life chart examples of, multiple use of it for high probability trades in Forex market. Before we go on, it's important I let you all know that I have a mentorship program where I mentor you all for 2 months through every single aspect of price action, from chart structures to Fibonacci to trend lines to psychology to risk management to trade management and all of these other parts of price action trading that makes you profitable. For example, with every single thing I've taught you with Trendline, it's also important to have very good psychology. And it's important to know that I'm a psychology expert and I have a proven course on psychology where you all can come on board, and there are stepwise processes where you all can follow in order to have the best psychology and the best mindset in trading. So all of this I teach in my course and in my mentorship program. Okay, so there are vast topics that I've outlined out. You can see the syllabus outlined that I've outlined out, where I teach and I help people become profitable with every single aspect of price action trading. Okay, and it's a very affordable course. I made it affordable so that I can reach a vast number of people without finance being the cause of anybody not coming on board. Okay, so link is in the description below to join the mentorship program, and I'll be happy to take you through this journey of profitability. So I'm going to be showing you 5 very beautiful opportunities that are right beside each other. Okay, this is an active GBP JPY market, and I'm going to be showing you 5 very beautiful opportunities that you could have taken and made massive profits on. okay, and these opportunities are right beside each other, okay. It's very important. Okay, so what is the first opportunity here? We can see prices establish what we know as the establishment phase right here, and we can see the touch one, touch two. Then right here we can see that market broke the structure, okay, or in this case broke the trend line. So when the trend line is broken, what do? You hide your stop loss, in this case above the trend line. You hide your stop loss a little bit right here, so you sell right here on the break of trend line, then hide your stop loss above right here and take profit. In this case, you can decide to take profit at what? At the 61.8. Okay, so you can see that price has gotten to the 61.8 right here. How do you get your 61.8? Bring it from the lowest point and take it to the highest point of the trend line, okay, of that movement, okay. And we can see that what price has gone to 61.8. okay. If we enter this trade, it's going to be a situation where we're selling at this candlestick right here, hiding your stop loss a little bit at the back for about 35 pips and taking profit at 61 point of about 228 pips. So in this opportunity, it's like 1:7, 1:8 risk reward. A very fantastic opportunity. If you put $1,000 on the line, you will go home with about $8,000 on just this opportunity. Okay, so you can see how very beautiful it is. In fact, at 61.8, you can decide to take half profit and see if price would get to 100.0 level right here. Okay, however, like I said, for most days, take profit at 61.8. okay, and you are not going to have issues of profits going into losses or break even. Okay, so the next opportunity, like I said, is just beside it right here. Okay, so what is the opportunity? We can see prices make, a clear break of trend line right here. Okay, we can see the touch one, touch two, and we can see that what this candlestick here was the candlestick that broke the trend line. You can see the green candlestick broke the trend line. Okay, so now we've seen a green candlestick break the trend line. Okay, what do? Hide your stop loss significantly below, and you can decide to what? Bring your Fibonacci from the highest point of the trend line right here, or lowest point of to the lowest point of the trend, and you can decide to take your profit at 61.8, or you can decide at 61.8 you take half profit and see if price will get to what? 100.0. okay, so you bring out your entry is going to be right here at the break of structure. We can see the green candle. Hide your stop loss at the low right here of about, let's say, 70 pips at the low. Then all of these movements would not have bothered you because your stop loss is significantly at the low of about 70 pips. Then for take profit one, you are going for 100 pips. That's like 1:1 plus risk reward. While for take profit two, you are going for 246 pips. This is like a 1:3 or 1:4 risk reward. Okay, imagine riding 1:4 risk reward, coming down here riding 1:8 risk reward by just a simple trend line trading strategy. Like I said, it's not about how difficult the trend, it's not about how difficult the strategy is, but about how accurate it is, how profitable it is. This strategy is very profitable. The next opportunity is just beside it again. Okay, that is the opportunity. We can see prices make touch one, touch two, and a break of structure. Okay, so this break of structure has provided us with our entry. Then where is going to be our exit? We can bring out our Fibonacci from the lowest point right here and take it to the highest point. We can decide to exit this opportunity at the 61.8, which we can see right here. You can check the Fibonacci out. This is the what? The 61.8. So it's going to be a situation of, entering at the break of the trend line right here, hiding the stop loss just a little bit above of about 87 pips, then riding for about 113 pips. Okay, this is the shortest risk reward among the three we've done. This is about 1:1 plus risk reward, whatever it adds up. Okay, so the next one we're going to be showing you all is this, whereby, okay, this is where the movement started from right here, but we can see, like you can see, this is where the movement started from, and we can see prices break a trend line right here. We can see all of this movement broken right here. Okay, so it's going to be a situation of touch one, touch two right here, and a break of trend line, while prices rolled towards to the 61.8. So what are you going to do? You bring out your crosshair tool, okay, enter at the break of trend line right here, put the stop loss probably for about 30 pips right here, and you would have reading prices for about 240 pips, to the 61.8 level. Imagine making about 1:8 again on this particular trade by just what? A simple break of structure and riding to 61.8. You make like a 1:8 risk reward, risking 30 pips. You can see that on this trade, prices did not even make a retracement, at all. You know, it was a situation of, okay, 30 pips, there was no drawdown. Prices, you know, kept soaking in to take profits, you know, at the highest point, 230, 240 pips right here on this particular opportunity. This would have been crazy. Okay, so another opportunity again, which is just beside it. Like I said, this is how we keep, you know, taking opportunities that are just beside each other, and this is how we keep trading forever, because it's a very profitable system, and you don't, you know, you don't need to go too far to see an opportunity. Just keep trading opportunities that just show up right beside each other. Okay, so right here we can see prices make all of this ascending move right here, and we can see a break of trend line right here, which indicates what? Bullish weakness. Now that we've seen this, this indicates bullish weakness, what do? You can sell at the break of the trend line right here. When you sell at the break of the trend line, hide your stop loss at the low right here of about 84 pips. Then you could have sold to the 100.0, which is the lowest point right here, for about 246 pips. Okay, probably at 50 point, probably at 61.8, you could take half profit, or in this case, just, you know, ride to the ride to the 100.0. Like I said, whenever you are riding to the 100.0, for example, let's bring the Fibonacci out, in this case, lowest point, highest points. Whenever you are riding to the 100.0, it's important that 61.8, you take half profits. Okay, take half profit at 61.8, so that, you know, even if you are taking half profits and market eventually, you know, comes back to stop you out at break even, you know, you are safe. Okay, but either or, at 100.0, if you are riding like this opportunity, you know, it would have been, like we said, put your stop loss at the low, 85 pips, rode it for about 250 pips, a magnificent 1:3 plus risk reward. Okay, so this is how, you know, we keep backdating prices, and we can go on for 5 years doing this. Okay, I do these examples multiple times with my students. Like I said, you can go back for about 5 years doing this, and there are just so many opportunities, you know, some 1:7, 8, like you've seen 9, 1:10, 1:5, you know, and we just keep riding these magnificent opportunities and making massive profits with them. You can see that what? All these opportunities are right beside each other. I didn't have to, you know, go and scout for opportunities. They are right beside each other, whereby, you know, just identify a trend. After identifying a trend, draw out the trend line, and at the break of the trend line, which indicates a weakness in that particular trend, sell. And you can sell to 61.8 or sell to 100.0. Okay, those are the most significant exits. Of course, we talked about exiting with what? Support and resistance, but the most significant that I use are the Fibonacci. That is not going to allow you to, you know, start counting up and down for support or resistance levels. You understand? So this is very, very important, and this is one of the best trading strategy that you are going to see out there, and it's the most accurate and most effective, and the one strategy that will give you the highest risk to reward ratio. So like I said earlier, if you want to learn more about my system, link is in the description below, and see you all in the mentorship program.